Well, we'll go anyway. It might just be a little bit more clunky, if you will, but I'll go through it and make the best of what we have over here since it's not advancing the slides. My name is Alex Perney. I will be your moderator today. If you have any questions, please feel free to reach out to me directly. My contact information is right on the slide in front of you. I'm happy to be a resource. I've been doing this for almost 9 years now. I've seen a lot of different markets in that time, although the majority of them have been pretty good, but I've seen uh, almost 3 full presidential cycles. I've seen a lot of different things happen, different legislation, different markets come into play. So I've seen a lot of different things that people have done and seen what has worked, what really hasn't for people. So I'm happy to be a resource to you if you have any questions on some more specific things that might be pertinent to exactly what you're looking to do and maybe getting out of the markets as they currently stand. Now, it's really important today that everything I'm presenting to you is for educational purposes only, and Advanta IRA and our employees do not provide legal, tax, or investment advice, nor do we endorse or promote any products. All information provided is for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of financial investment. Or I would also even go further to say before making any taxable decisions that might affect you going on down the road, as those could be quite severe depending on what actions that you take. But again, it's going to be something that you're going to need to get some professional help, or at least do a good amount of due diligence on your side before making any ultimate decision on how exactly you're going to proceed. So what exactly do I want you to take away from today? What defines a tangible asset versus a stock or a security? That's a really good place to start because not everyone understands when it just comes to investing what exactly it means to have a one asset versus another within your particular IRA. What options are available to you at this time? There's going to be a lot of different things out there that may seem attractive, or you may not understand your options with particular types of accounts, especially with people being furloughed, laid off, or maybe if you have reduced hours. There's a lot of different key aspects that might actually help you increase the amount of funds that you have available to you with regard to being able to invest, although it may seem like a particular detriment to you at the time with regard to employment status. That can actually be a very big benefit if you've been trying to get access to your 401k funds for a while to do some alternative investing. That could be quite a silver lining to this current status of our marketplace. And how to identify, well, what worked best for you. Not all of the alternative assets that we see here at Advanta are necessarily the right fit for everyone. And if someone is looking to generate long-term cash flow, one type of asset may not be good for that. While as if one person is trying to take advantage of suppressed prices of certain assets within this time, that may definitely be a higher risk tolerance than someone that is looking maybe at the age of 68, 70, of looking for a lot more stable something that's a lot more stable that may generate cash flow, but they don't care too much about the value. So there's definitely some things to look at with regard to how to identify the best one, what's it going to mean for you? And that's kind of going to be discerned through most of the presentation when I kind of show you what the different plays are and how that actually can play out. Okay, now the different types of self-directed plans. Now this is going to get a little bit into what might actually be available to you now that may not have been available previously. So most people understand that when we talk about self-directed IRAs, they think, oh, IRA, traditional and Roth IRA. But there's a lot of other different types of plans that we administer. And depending on how you move funds into those plans can actually determine your options at the moment as well. So a traditional IRA is going to be by far and the most common type of retirement plan out there that people have. Now, the majority of these types of plans are funded from 401k rollovers, meaning if that you've had a 401k from a previous employer or an employer that you no longer work for, you can take those funds without any type of taxable penalty and move them directly into a traditional IRA. Now, if you had a Roth component of that 401k, that could port without any type of penalty directly into a Roth IRA as well. Now, the sad realization of what's going on right now is that a lot of people are being let go from their jobs. They are being furloughed, they are being laid off, which by no stretch of the imagination is going to be a permanent uh, thing in our culture and our economy, but it does bring up an interesting opportunity for people. Now, most of the time, people don't think opportunity with being laid off from your job, but a nice feature of a 401k is that you are very restricted from putting money into one of those types of plans when you're still participating with your employer. Now, if you have been terminated from employment, that 401k now becomes yours to do with as you wish. Now, if you'd like to get out of the directed investments that they have you in that 401k plan, a lot of times you'll be invested in things like mutual funds or index funds, which could be taking quite a hit right now, depending on where they're being invested. You now have the ability to liquidate and roll over those 401k funds to an IRA. You can get them out of what is being invested in that 401k plan if you have changed jobs or terminated employment and move them to a traditional IRA or Roth IRA if you're in a Roth 401k plan, and then begin investing at a rate and in a asset class that more better suits what you're looking to accomplish. Now, we can certainly customize any other type of plan that you might have as well, whether it be a SEP IRA, a simple IRA, a health savings account, or anything like that that you'd like to roll out of a previous employer's purview. You now have the ability to do that if you have changed terminated positions at your current job. So that's one of the kind of silver linings that I'd like people to understand from this is that if you're looking to kind of shelter your retirement, if you have a 401k that's underperforming or is getting hit with a lot of fees and losses, you can convert that into a cash position and put it into an IRA and then pursue investments that are better aligned with what your current goals are. Now, what are some of those types of assets that we're going to be covering today? Well, they're as varied as the day is long, but what I'd like people to really take away from is things that are a little bit more tangible, or if they're not tangible, maybe a little bit more on the leading edge of what might be considered alternatives to traditional stocks, bonds, mutual funds, things that people see the big CNN headlines of every day when they talk about huge losses on Wall Street or the last 4 years of earnings being wiped out, things that are relatively insulary from that can help to provide a safe haven in these very trying times. Now, there's no comprehensive list of this, but some of the most popular that we've seen, especially during more trying economic times, have been things like real estate, actual tangible assets that no matter what happens in the world, there could be a natural disaster, a financial collapse, but the actual asset is still there. It's not going to inherently go anywhere. The value may change, but your ability to make money off of it, whether that be from rents or some other type of utilization, will still remain the same. Okay, I see a raised hand from Edwin. All of the chat is or everything else is muted. If you can type in your question, I am more than happy to address that. If you just go ahead and type that in, it'll come directly over to me, and I will, excuse me, certainly take care of that, whatever question that may be. Because the nice thing about real estate, and even seeing it during the last economic downturn, during the Great Recession, is that although values absolutely plummeted, the individuals that were mainly hurt were the owner occupied properties, not necessarily the people that owned real estate outright, maybe in a retirement plan or otherwise that had maybe a rental portfolio, because people inherently still needed a place to live. They were still renting, and you can adjust rent to help try to keep renters in these properties to help continually make cash flow for you. And the nice thing about if you're doing this through an IRA, all of that cash flow that your IRA receives from that single family home or duplex or larger commercial property that it owns is received tax free. So you don't have to worry about any type of taxes that are coming in from that. And then instead of your retirement income being based on, let's say, dividends that are tied to stock price, for example, Microsoft pays out a dividend to shareholders based on the actual price of the asset each month, the rental payment is very rarely tied to the value of the home. The home could go from $100,000 in value to $200,000 in value and still rent for the same $1,200 a month that you've been paying if you have a locked in lease. So that's one big benefit to investing in something tangible, especially like real estate. Another area that people like to gravitate towards in very tumultuous times are things like gold and silver or precious metals in general. We'll get into some more specifics of what exactly it means to invest in those and what you have to look for if you're going to purchase precious metals in an IRA. But you can actually buy physical metals. We have plenty of clients that hold gold, gold coins, gold bars directly in their IRA that are safe kept at qualified safekeeping storage facilities. And instead of holding cash, they hold actual precious metals. Now, to get a little bit of background to that, besides just being rare and desirable for jewelry and things like that, gold and silver serve a huge, and to an extent platinum and palladium, serve a huge function within the construct of manufacturing throughout the world, especially when it comes to electronics. And their scarcity and usefulness in some of these things has helped, along with the vanity reasons that people want it for jewelry and things like that, has helped to keep these things in very high demand for a very long time. From antiquity to now, gold and silver have always been sought after and used for investments or trade, and people tend to like that quite a bit. So gold and silver are definitely something that people get into a lot during these times, and we can certainly help you out with those types of investments. Notes and mortgages are kind of a little bit of an interesting departure when you think about tangible assets. We have a lot of clients that, even in economic trying times, don't necessarily want to have the liability in their IRA of actually owning a piece of real estate and the expenses that go along with having to maintain real estate. So they will lend someone money based on the value of the property and then hold the actual note and mortgage in their IRA. So in the event of default, the IRA then would receive the property back into the IRA. So again, a very secure way to invest your money, whether or not that is something that you're looking for. If you're looking for a more longer term play or actually cash flow, that can be something to look at as well, as potentially lending someone money. Now, obviously, with the decrease in value of securities and the like, people would potentially be starting IRAs with maybe a little bit less money than they otherwise would have if the market had been doing better. But the nice thing about real estate in different facets is that it's not just single family home that is going to be the end all be all of what you're looking to purchase. Especially here in the Tampa Bay area, if you go over into places like Polk County or Hernando County, there's a huge market for mobile homes. A lot of people like to move down from the north. They don't have a ton of money. They'd like somewhere to stay, or there's workers or just people making less income. And especially if people are making less income, the propensity for people to want to find cheaper housing is going to be much greater. And mobile homes fill that niche to a T. So we have plenty of people that have purchased mobile homes, whether they buy the manufactured home directly, whether they buy the land and then put one on there. That's another very interesting way that people have looked to hedge their bets against uncertainty in times like this. Now, moving on from that, one of the more leading edge ones that I actually didn't put on here until today was cryptocurrency. is about as alternative of an investment as you can get from the norm of what people, what I would say, normally invest in. And we're set up to hold those types of assets for our clients here at Advanta. Even with the tax law changes of 2018, which made every single in-kind trade of cryptocurrency, meaning if you traded one type for another type, to be a taxable event based on the value basis that you had, we can hold that and you can do that tax-free. Now, the reason I put that in there is that over the past several days, the prices have gone very, very high for almost every single one of the, I think I was looking last night, the top 30 on Coinbase's list. The values were trading well and above 10, 15, sometimes even 30% what they were 2-3 weeks ago. So although those are significantly more volatile investments, for someone maybe looking for immediate cash flow, if they had some money that they wanted to immediately try to make a little bit of return on, it could be an interesting play to look to cryptocurrency to help make that happen. And again, it's something that is not necessarily tied to any one particular economy. So investing in something that is so decentralized could be quite a attractive value proposition for some people. But again, it's not for everyone. And then from the list goes down to maybe some more niche type of investments. You could do a multifamily partnership deal where you and several investors maybe that have all had some type of situation where you know have access to your 401k, try to take down a larger commercial piece of real estate and provide housing for people and get that cash flow coming in, which again is going to be tied to rent contracts and not necessarily market conditions. You can do things like option contracts, buy assignments, and wholesale real estate deals, joint venture with people together, private stock. In this time might be a little bit outside the realm of most people, but again, companies still need money, and if they're willing to sell equity, you could potentially be able to buy into a private startup or private stock for a significantly discounted rate. Now, the next one, Forex. This one is very risky, just from the fact that it is a highly volatile market to bet, or I should say to invest on foreign exchange markets. However, the US dollar as of late has been doing very well. So for people looking to an alternative that they may not have the option to do anywhere else with regard to doing it within an IRA, something like a foreign exchange account where you buy and sell foreign currencies against a given value, such as the US dollar, could be an avenue where people could make some money in the short term if they're looking to do something that might be considered a bit more risky or a bit more, I should say more volatile, not necessarily risky, because risk is kind of inherently subjective. So I would say more volatile. And then depending on where you're at, you might have a lot of opportunities for farming, agriculture, which are going to be in huge demand, especially with the amount of consumption that is going to be taking place for various reasons of agricultural products. You can invest in things like that depending on what's being presented to you. And the nice thing about at least all of the things past, let's say, foreign exchange and cryptocurrency and gold and silver on this list is that you get to go out and find these deals. If you know of someone that is doing something with a apartment building or someone that needs to sell their home or you have the opportunity to go out and acquire one of these types of assets, we can help you do that. Just by virtue of having a self-directed IRA, we can go out with you and help you acquire that. You do the legwork on actually finding the asset. We take care of getting everything purchased and then properly held within that account for you, and then in turn be able to enjoy the benefit of having that type of asset in your account. All right. I do apologize for kind of the clunky transitions. Um, so, and one other thing I do like to indicate is that if you are just inherently scared of the market, it is a quite a tumultuous time. The option just to hold something in cash is available. We can hold cash. We have FDIC coverage up to $250,000 limits. We are not a bank, but an administrator and custodian of your funds. So it's not necessarily like we have deposits and liquidity risk where we're lending out money or anything. The cash we hold is strictly just the cash we hold for our clients. So if you wanted just to hold something in a cash position, we can also do that for you. Now, just kind of to update people, there have been some especially up-to-date things, and we're trying to bring you as much up-to-date information as we can. So there have been some recent updates this morning with regard to tax filing that I'm going to cover in a minute. But if you're under the age of 50 and a half, you can contribute $6,000 to an IRA if you just want to take some of your personal money and put it somewhere where you can invest and not have to pay any taxes. 70 and a half, it's $7,000 if you're over the age of 50 and a half. And they're made up of earned income. So just look at how much income you've made. You can contribute that up to those limits into an IRA, and you can do it as a spousal unit as well. Now, the interesting thing that has just happened this week is that the tax filing deadline has been moved from April 15th to July 15th. Now, and I always get this guy's name wrong, Munchin has come out and said that you can file your taxes up until that date. Now, the interesting part about that, at least for IRAs, is that you typically have in a, just call it non-emergency scenario, you have up until your tax filing date to make a contribution and open an account such as a Roth or traditional IRA. So if you were still planning on doing this, the likelihood that that can happen, I would say is pretty great. Now, I haven't had the ability to officially confirm this. As soon as we do have the confirmation on this portion of tax status, we will let everyone know, either via press release, a blog, a quick webinar, a mass email. If you've signed up for this, we do have your email, and let you know exactly if that has changed. Now, if you're making $1 million or more in a given year, I do believe that you still need to file your taxes, but this is a very fluid situation. But just as of reading the CNN article put out this morning by Kevin Lipdak at 10:45, it details the tax filing date from April 15th, and then all taxpayers and businesses will have the additional time to file and make payments without interest or penalties. That last quote I just read was directly from Secretary Stephen Munchin, is what he tweeted today. So again, we're trying to give you the most up-to-date information on this, as everything in everyone's life is very fluid right now. So just to understand that you may have some additional time to make a contribution to an IRA, the likelihood of that being the case is very good. When that change being from April 15th now to July 15th. So you have quite a bit of extra time to maybe establish an account and make a contribution for last year as well. And just some other interesting legislation that came in from last year in the Secure Act. Individuals over 72 can now contribute to traditional and to Roth IRAs if they still have earned income. So it's not just restricted to Roth IRAs. They can contribute so long as they have earned income well into retirement. And again, if anyone has any questions, feel free to just make sure you type those in to the chat box. So buying real estate. Real estate, again, being a tangible asset. You can walk by and put your hand on it. You don't get that kind of security and that kind of asset with securities. I said security twice just to delineate security as in safety and longevity of an asset versus a security being a stock or a mutual fund or a bond where you're buying a fractional ownership into a particular company or fund, if you will. Now, buying real estate isn't incredibly complicated with an IRA, but there are some key steps to take away from it. You have to understand that if you do want to do something with a 401k that maybe you've recently gotten access to, or an old 401k that you've had maybe sitting out there for a while that you really want to get out of those mutual funds, is that you find the piece of real estate and then we help you close on it. So the property's purchased in the name of the IRA. All funds for the purchase come from the IRA, and then all of the income comes directly back to the IRA. So that's the kind of the benefit to that, is that you get any type of rental income. Again, you get to negotiate that with the renter. You get to figure out what works in the marketplace that you're buying the property in. There's no set specific amount of rent that you have to charge. You can charge something that is affordable to them in their particular situation right now, helping them out, and then also helping you build your retirement, even though you may be seeing significant losses if you're invested in the market. It's a very stable way to invest. Now, again, nothing is risk-free. You do need to make sure that you assess the risk of purchasing real estate. If you don't have a renter, what happens then? If something happens to the property, the IRA has to pay for those improvements or restorations of it, and taxes and things like property taxes and the like. So just keep in mind that although I do promote these as very secure assets, security doesn't necessarily mean that it's going to be a good fit for everyone, just with the amount of initial money that you have to put up to buy real estate, and two, some of the ongoing cost and concerns that go along with that. So just make sure that you understand that there's a lot more to buying real estate than just having enough money, maybe in a retirement plan to do so. Now, here's a quick case study, and I'll show you how this kind of works. And you can obviously adjust numbers for what you think might be uh, accurate in your particular market. Again, these are change widely depending on where you actually live in the United States. But let's say you've opened the self-directed IRA, decided to move over that 401k you just got access to for this. Now, in this case, John identifies a property being sold as a short sale, meaning that someone has gotten behind on their mortgage. They've decided to sell the property. They've worked out with the lender. They've decided to sell that property in lieu of foreclosure. So John's offer is accepted for $120,000, and the deal is closed in the IRA. So that means the IRA at closing wires $120,000 to the closing agent. Now the IRA holds the deed to that property. The property is rented for 2 years for $120,000, sorry, for $1,200 per year for 2 years. So that's $28,000 that he's received back in to his retirement plan on that initial $120,000 investment. Not too bad. John then sells the property in 2 years for $170,000. So then in 2 years, and it's very well to assume that in 2 years, hopefully values will have increased, or maybe you still want to hold it and continue to rent it. Again, this case study isn't necessarily indicative of current situations, but it is a good illustration of how this can work. John then sells the property in 2 years for $170,000. So he had $50,000 of straight profit from the $120,000 that he bought the property for. Add that to the $28,000 that he had made in rentals, which is actually $28,800 if you multiply that out. So no taxes are paid on the $78,800 in profit that he realized, and John now has $198,000 to invest. But let's say he just wanted to continue to ride this out and continue to get rental income. Well, every year he would have an additional $14,000 of income coming in that he could then in turn do really whatever he'd like to with. He could leave it in the IRA, he could distribute it, and depending on his age, it could also become a supplemental portion of income if he still wasn't working. If he still had employment issues, he could still use the funds coming in and distribute portions of that rental income to himself to help offset living expenses. And depending on how old he is, he may or may not have to pay a penalty, but again, it is definitely something to consider. Not having to take the entirety of the distribution as taxable, being able to shelter the majority of the profits as tax-free, and then moving forward, with possibly any distributions for living expenses. So now we look at benefits of private lending. So when it comes to private lending, it's basically just acting as you normally would if you were to go buy a house personally. Instead of going to a bank, in this case, you become the bank for someone. So if someone wants to purchase a piece of real estate and you don't want to have the headache of dealing with tenants and you don't want to have to deal with property taxes and insurance, your IRA could lend them the money and then hold the mortgage for that for that property. So instead of your IRA having a deed to a property held within it, it's going to have a recorded mortgage and promissory note. So every month you'll be receiving either interest only payments or principal and interest payments into your IRA. And then in the event that the borrower defaults, you will then foreclose the house in the IRA, and then your IRA will own a piece of real estate. So the several big benefits to lending within an IRA is that you get to determine the terms. And just like with rental property, you get to make sure what you're doing works for the person who's borrowing the money, or in the case of real estate, who's renting the property. So in this case, you get to make sure that if the person is, the person's going to maybe be having some financial hardship that's going to keep them from having extremely steady cash flow for the first few months, you could defer those payments to the back end of the loan. You could do something where you make it interest only instead of principal and interest to help lower that payment. You could do some type of early payment credit where if they pay early, there's maybe a discount or some type of additional principal reduction. you can really make this work for whomever is going to be borrowing that money. And that's the really nice part about this is the IRS doesn't come in and kind of blanketly define how you have to invest your money. You get to do it at your own pace. You get to do it at your own discretion as to how you actually do this if you want to be a lender. And also the nice part about this is that you get to set the rate at which your IRA grows. So if you're just looking for present day cash flow and you're not necessarily looking about appreciation, which might be a very valid game plan in the current market, you get to actually determine that by how much interest you're charging, how much payments being made. You also have the ability to potentially reduce the liability exposure of your IRA as well by having just holding the note and mortgage. You're not exposed to, in most cases, lawsuits stemming from liability of property ownership. There's a good investor around the area that has been very big a supporter of us, Pete Fortunato. I would encourage you if you're looking for education on how to buy real estate or creative deal structuring to seek him out. He is a great resource, but he has a good line that I will use here is that when someone trips and falls in a property, they don't trip and fall over the note and mortgage. They trip and fall over the loose baseboard that the property owner didn't fix. So that's how, in most cases, you can have less liability by being a lender than otherwise if you were if you were owning the property directly. Okay, we got a couple questions. Great. Carol asks, can you just take a down payment from an IRA and keep the mortgage in the IRA? Carol, if you could please type in, I have a question for you. Are you referring to buying a personal property and then holding the mortgage in the IRA for your personal residence? That needs to be clarified. And then Moyo asks, can you please repeat the name of the investor? Yes, his name is Pete Fortunato, Fortunato. I believe his website is just peterfortunato.com. Or if you Google him, you'll be able to find it. Okay, so can you just take the down payment from an IRA and keep the mortgage in the IRA if you just want to use it for investment purposes? Well, Carol, in that case, I would just pose to you, why not just buy the property directly in the IRA? Unless you need to personally use it, there really wouldn't be, in my mind, a perceived benefit from that. I mean, if you'd like to get personal cash flow, which I guess would really be the only way in that scenario, if you like to get personal funds out of that, you could do a partnership with your IRA where you go in like 50-50 or 70-30 with personal funds, and then you get some of the cash flow out of that. Or if your IRA owned it outright, depending on your age, it might just be just as prudent for you to buy the property in the IRA wholly and then just distribute portions of the cash flow. Okay, so you don't have enough for the, okay, well, what your IRA could do in that case, Carol, is that you could actually take out a loan in the IRA so the IRA can finance the purchase of the property. So it can be the buyer and borrower on a note. Oh, great question. So Elise asked if an investor with a solo 401k wanted to buy a note. And what she's referring to is that people buy and sell notes just like they buy and sell property. If let's say I had lent Jane Smith $30,000, well, now I have a promissory note. Now she's still responsible for paying me. Now I could sell that note to John Jones. And John Jones then would be the person that Jane Smith has to pay them. Now, when you borrow money within an IRA or a 401k, meaning that the 401k or the plan actually takes out debt for purchase of something, has to be what's called non-recourse. But if you buy a note on a secondary market, the IRA or the 401k is not the one borrowing the money. They are just buying an asset, and it doesn't necessarily have to be non-recourse. We see a lot of people that go into secondary markets and buy underperforming or performing notes, and they're typically just secured by real estate. There's a personal guarantee on behalf of the borrower. You're just going to be the note holder now, not necessarily the borrower at least. So it's perfectly fine for your 401k to buy uh, things other than non-recourse loans. If it wanted to buy a non-recourse loan, that's fine. But just, there might be some additional inherent risk. But thanks for the question, at least. And Carol, I do hope I answered your question. If you do want some more clarification, either type in another question or you can give me a call or set up a consultation. I'm working normal business hours, so I can certainly give you a little bit more in depth if you need it. Okay. Excuse me. So where were we? Benefits of private lending. They can be very low maintenance assets when you lend someone money, meaning that besides just making sure that they pay every month, you don't have to put a new water heater on a mortgage. You don't have to pay property taxes on a mortgage. Your mortgage doesn't need you to update lease terms or anything like that. You just sit back and, not to steal a cheesy line from a bad commercial, but it's mailbox money. Yeah, so long as that they are paying, that's about the only thing that you have to do for that asset. Now, you may want to, on an annual basis, call the insurer of the property to make sure that the property owner is still up to date with their premiums, make sure that the insurance policy names the mortgage holder, be your IRA or 401k, as an additionally insured on that to make sure if there is a catastrophic event that you are protected. And another nice thing is that, unlike with real estate, partnering together with a few different people to to fund a mortgage is much easier than doing it with a piece of property. It's a lot easier for people to come together and just send money out for a very low maintenance asset, as opposed to having to do it where you are having to do a lot of things like sign leases, make sure property taxes are paid, and the like. Now, people are probably a lot more familiar with what real estate is. It's people, for the most part, live in a home or live in an apartment. They live in real estate. So you have a very intimate knowledge, whether you know it or not, on what a piece of real estate is. And for the most part, it's pretty easy to get information on how to buy a piece of real estate. You go find one, you like it, the price, you like the ability for yourself to rent it out. Okay, let's buy it. Lending people money has significantly less information just in the general populace and people's general mindset than real estate does. So to help break it down, you don't necessarily have to go to someone and say, hi, if you'd like to borrow money, it's going to be a 30-year mortgage and it's going to be X. You have a lot of flexibility on what actually the note is and how long it's lent out for, how much they're going to pay, whether it has security or not. So when you lend someone money, especially with an IRA, you get to be very creative with how long the money's out there. You can lend someone a 30-year mortgage on a piece of real estate. It could also be 15 years. It could be a 5-year with an adjustable rate after one. It could be a balloon note, meaning that after a certain number of years of just interest-only payments, then the whole note becomes due. You can do short-term or transactional funding. You can even lend someone an unsecured loan, and at least very pertinent to today's or our very current situation is that if someone you know needs immediate cash for whatever reason, and you have a fairly good inclination that they have an ability to repay that, you can actually lend them money personally, so long as that they are not yourself personally or spouse. They are not a direct lineal descendant or ascendant of you, meaning that they are not your son, daughter, mother, father, or spouse. But you can lend money to a cousin, you can lend money to your neighbor, you can really do it to whomever you'd like to, so long as that you're comfortable with the inherent risk of unsecured loans. We kind of covered joint ventures, equity participation is a little bit more of a master class, but again, if you're familiar with that, and wrap loans as well. So there's a lot of different options for you out there that can cover a wide variety of different things that you'd like to do with a loan. They are as varied and many as the day is long. So now, excuse me, what does it look like from a case study perspective? So Andrea's joint venture Steve needs a loan. So she's found someone that actually wants to borrow money from her IRA. So she belongs to a local real estate club. She's interested in a joint venture with people who buy and fix foreclosures. And Andrea has $100,000 in an IRA that's currently invested in mutual funds. And you could substitute 401k here. So the key point is that she has 100 grand that's invested in security assets, which right now everyone I'm sure knows or has heard are a very volatile place to have your funds. So she thinks she would realize better and more stable returns by working with other real estate investors. So she performs her due diligence on Steve and the property. Steve is looking to fix and flip the property, and she decides to pay him $100,000 to buy and fix the property. So again, it's pretty much the same kind of construct as buying a piece of rental property. She has gone out. She has determined that she wants to invest in real estate, but rather would lend the money, and she finds someone has become comfortable and decides to lend them the money to fix and flip the property. Excuse me. So the loan terms is $100,000 with an interest rate of 5%. Now she's also written into this loan that she gets 1/3 of the profits after the property is sold. So the nice thing about this is that she's also hedged on receiving some of the profits after the property is sold. So the first monthly payment is $420 because it's just interest only on the 2-year balloon note. The note is prepared by her attorney. She read and approves all the documents, and then she sends all of the purchase authorization work to Advanta, and we fund the note. We got a great question. So Mike asks, what if she doesn't go with Steve? Can the IRA still pay for the due diligence? Well, yes. So to kind of dig into your question, Mike, I think I'm understanding what you're saying is that let's say she doesn't like that deal. Now the IRA, if you're paying, if she needs to pay for, let's say, a credit report, if you're not making the borrower do that kind of stuff, then yes, the IRA would be the one that needed to pay for it. If she's just doing a little bit more, hate to say, can't like think of a better word than old school, maybe just sitting down for a cup of coffee, looking at comparative market analysis of what other properties have sold and things like that. Yeah, she can, there's really nothing that the IRA would reimburse for. She can go with whomever she really likes. So she's not necessarily tied to that. But the IRA, if there were to be inherent costs associated with things like, again, criminal background checks, and things like that, yes, the IRA would need to pay for all of those types of expenses if the borrower was not paying for them. Now, the payoff of this loan, Steve's ready to sell the property for $130,000 after closing costs. Gets the payoff from us, and then all of the funds that are due back to Andrea afterwards. She gets 1/3 of that $30,000 of profit, so she gets an additional $10,000 on top of the 2 years of $420 payments that she received in as well. So it worked out pretty well for her. And again, this may be a little bit of a ideal situation, especially for today's market, but again, it shows the ability to be flexible, especially if someone maybe doesn't have the ability to pay a lot up front, but you know that the property is going to be able to sell, or maybe you want to speculate on a market turnaround and give them very favorable monthly loan terms while still having a secured mortgage on a piece of property. You could maybe write it as all profit sharing. So a very interesting way to go with that. Now, what you'll probably see a lot of, especially in today's market, is you're going to see a lot of people advertising gold and silver and promoting gold and silver as kind of a bastion of security in these very turbulent times. And it can be. And again, I put other up on this slide just to make sure that you understand that when it comes to these kind of things, Warren Buffett has a quote that says, gold is a great investment, but it does not pay a dividend. I think he went on further to say, or maybe his exact quote was, it looks pretty, but it doesn't pay a dividend. So you're not going to necessarily probably lose a ton of money buying precious metals, but you're also, in the most case, not going to make a ton of money as well. It is looked at as a big hedge against inflation and market uncertainty, which is proven itself over the past 100 years to be a fairly accurate statement. Now, what are your options with this? It's not just limited to buying a gold coin to hold in your IRA. And the way it works is that you find a precious metal dealer, and there are many out there. There's many in the local Tampa Bay area we have contacts with that we can put you in touch with. And then there's other places you can find online. Again, give us a call. We can definitely help you out with finding and fleshing out some type of a dealer to buy these from. But I digress. Back to actually what your options are with these. It's not just buying a piece of gold. You can actually, with regards to the IRS regulations, there are 4 different precious metals that you can purchase. You can purchase investment grade gold, silver, platinum, or palladium. Now, people may be a little bit less familiar with palladium of the last ones, but it is a precious metal and it is increasing in popularity due to its use in certain chemical industrial applications, electronics, and there was one more. I can't remember, but I know it does have a lot of industrial applications. Not necessarily as much as platinum because that is used in catalysts for noxious fume mitigation, which is a really fancy way of saying almost every single car has about $1,000 component called a catalytic converter. The catalyst in that piece of machinery on your car is made up primarily of platinum and ceramic. So it's actually what helps reduce emissions in all cars. So it's a very, very in-demand metal for industrial applications. But kind of circling back to this, I said investment grade. Now, when you're looking to purchase gold, silver, platinum, or palladium, you need to keep in mind that you need to be purchasing something that is of investment grade, or what I mean is a high enough quality. So these types of tangible assets, these pieces of metal have to be refined to a purity of at least, for gold, 0.9995, for silver 0.995, platinum and palladium both have to be refined to 0.995 for them to be considered acceptable for investment grade into an IRA. Now, what that means is that anytime if you want to buy a coin from a national mint, such as the US Mint, so gold and silver eagles, Canada, the Canadian Mint, the Mexican Mint, Australian, Chinese national mints, all these different mints make investment grade coins that you can purchase within an IRA. And then some other ones, again, I mentioned cryptocurrency. Although that is inherently a much more volatile market than something like silver and platinum due to the current state of the market and the decentralized nature of cryptocurrency, the prices on almost all of them for the past week have been climbing very high. But again, that means that if they've been climbing that high that quickly, they could also in turn go down that quickly. So it's something very potentially very volatile that you need to keep an eye on. But if you wanted something that was even farther outside the realm of, centric to a particular government or a particular market, that might be of a particular interest to you. And there's not really too many of those that we cannot hold for our clients. Very happy to discuss that further. And then cash. Although we like to expound on the myriad of different types of alternative investments you can do with us, we are just as happy to hold a cash position for you as anything else. It is FDIC insured. Any cash that you have here up to $250,000 for the FDIC limits. It is cash being held. It's not in any type of money market securities trade. It's strictly just cash. It is a very safe way to potentially weather the storm if you want. Again, we don't offer any type of investment credit on that, but if you wanted to hold a cash position, we can certainly help you out with that, and it might be a way for you to hedge against some of the uncertainty. So while there is a multitude of ways for you to invest your money in more tangible and more secure assets, depending on what your frame is for looking at this, I would encourage you to not discount cash as well. Now we're coming right up on an hour, so if you have any other questions, feel free to reach out to me. Again, we will let everyone know as soon as I have more clarification on the Treasury Secretary and the updated filing date for taxes, if that also does extend your ability to contribute into July or not. That's again, a very fluid situation, and we will put out that information as it becomes available. We will try to be a good resource for everyone with regards to your tax filing and your retirement account plans. So keep in mind that you can always check to advantaira.com and our emails for some great information. And also keep in mind that if you have been laid off or furloughed, you might have an opportunity there to get your funds out of that 401k and into something inherently a lot more stable. So please give us a call. Let me know if there's any type of questions that I can help you with. We are still here. We're working. We're here to serve you and our clients abroad to make sure that you have the information that you need. So again, I'll stick around until we have about 10 people left on the webinar for any questions. Thank you very much for everyone who attended. I hope everyone is staying safe and healthy with their families. And again, any questions, please let us know how we can help.